Hi everyone, let's have a look at my 4 micro Elliott Wave scenarios on Bitcoin, starting with the most bullish scenario where this is a wave 1 followed by a wave 2 and then another 1, 2 before then a very explosive 3 to the upside where you definitely want to see volume increasing massively. Now if we then look at this corrective structure that we have at the moment, in this then being a 1, 2, 3, 4, 5, finishing the second wave 1 before then now a corrective structure in a wave 2, I'm looking for then a 3-wave structure in this particular scenario. So in this scenario, could this be the low of wave 2 already? Well, in my opinion, the probability would be very, very low that this is at the moment the low made for this potential wave 2. Why? Because this wave 2 would be incredibly short. It also looks impulsive, and if this is impulsive, you want to see a 3-wave structure as a bare minimum. But this being the low of 2 time-wise also does not make a lot of sense. Usually, and you can see the fib times that I have on my chart, usually a wave 2 takes at least 38.2% of the time it took to develop a wave 1, which is the vertical line that you see over here, currently at 8 p.m. Central East European time, which is 1 hour after this video is finished. So in this particular scenario, the probability, or after this video is online, sorry, so the highest probability for me would be that this is only the first structure, then you have a corrective second structure before then a third structure to the downside. And if we then look to the downside, we have the golden pocket over here in confluence with this range point of control, which is quite interesting, about 28.5k. So this could be an interesting area for maybe support for then a continuation to the upside. Now, when we look at the CVD, we actually had some bearish divergences going on over here after we hit the point of control, which I will show in a second. That was the point of control of this big range over here that I have shown in some previous videos. We started to move to the downside, then a few candles here to the upside, creating bearish divergences for this drop to the downside. But we also have bullish ones now. So let's zoom in to the divergences and first to the bearish ones. So as you can see, over here, we then hit the point of control, which I'll show in a second. Price moving to the downside with a couple of 15-minute candles, then moving to the upside slightly. But as you can see clearly, a lower high has been made. But if you look at my horizontal line or my cursor line and then the horizontal one, you can see that actually the CVD in yellow created a higher high. So we have a lower high on price, higher high on the CVD, absorption going on for then a push to the downside. But now that this push to the downside actually happened, we can see a little bit of bullish divergences. So now we have these lows over here, price creating a higher low as it stands now. But we have the CVD, the yellow line, creating a lower low. So if you now look at my horizontal line of my cursor and I move it to the CVD line, you can see on the right side that this yellow CVD moved below my horizontal cursor line, which basically therefore means higher low in price, lower low on the CVD, which is a bullish divergence, and the target for a bullish divergence is taking this high. But then again, I would actually be looking still for some sort of a 3-wave structure, preferably. Of course, price can just push to the upside, of course, but preferably time-wise and also Elliott Wave-wise, if this looks to be more like an impulse, looking then for a 3-wave structure to the downside. Of course, if price goes up and then continues to the downside and maybe bounces somewhere here, or maybe goes to the 786 area, which is in confluence with the value area low of this range over here, of course, that's also a possibility, then very likely the bullish CVD divergences will increase, meaning that if price is going to continue further to the downside, the yellow line will also continue to go further to the downside, creating some bigger bullish divergences. Of course, divergences don't have a 100% hit rate. They can be leading, meaning that price will follow the divergences to the downside. However, as it stands now with basically most of my scenarios that I'm going to show you, the bullish scenarios are currently preferred in my opinion. And in this scenario, this is by far the most bullish scenario, we expect a big push to the upside that hits at least the 1.618, which is taken from the low of this blue wave 1 to the high of the blue 1 to the low of the blue wave 2, which is a minimum target, as a wave 3 can definitely be extended to higher targets. If we then move to my second scenario, which actually also is a bullish scenario, because eventually we would be looking for more upside, we then have this low over here, and then we have a 3-wave structure in a WXY or an ABC, or no, this is a WXY, so a WXY in this wave W, where the final part, this wave Y, is actually a 3-wave structure, as you can see over here, finishing this W, before then now creating an expanding flat in a W, looking for a bit of an X, then eventually a Y to the downside, which then has to be a 3-wave structure, and therefore finishing wave X. And if I then open my target boxes, then we have some interesting confluence at my blue target box over here. First of all, we have a daily over here. So if I actually move down to my confluences, open the high time frame levels folder, you can see at 28.1K, we have a daily. This daily is in confluence with the 786 that we have pulled from the low to the high of W, and you also have a double low here on the Coinbase chart. On many other charts, actually, the second low over here took the liquidity of the first one, but on the Coinbase chart, the one that I am using, these lows are the exact same price. So we do have a little bit of liquidity for maybe then price in a W, X, Y, going to the downside, potentially grabbing some of that liquidity before then a push to the upside. So also in this particular scenario, we then expect a push to the upside. As far as it stands now, if I go to the 30-minute, you can see that we had this range going on over here, and price at the moment is bouncing on the value area high of this range. So if I actually put a horizontal line on this blue line, you can clearly see, let's actually make it blue for to make it a bit easier. You can see that currently price wicked on top of the value area high, but found support so far for then this bit of a move to the upside. However, once price, in my opinion, is going to test the value area high again, it is going to be quite likely we're going to take the low and at least continue to the point of control, if not lower, of course, in this particular scenario, where an interesting target area is the target box between 28.2K and 28K. If we then go to this ABC scenario over here, which is a little bit of a messier chart. I'm sorry for that, but I will run you through this chart. So actually, let me remove this fixed range. There we go. If we look at this chart, this is the one that I've shown in my previous update, where we have a B, C to the upside, where the most common target area for wave C is between the 1 and the 1.236. And as you can see, the 1-to-1 over here has been hit basically to the dollar, which is very, very nice. But more importantly, I was talking about this point of control in the past couple of updates already at about 29.3K, which is very important and also interesting confluence. So this then being a 5-wave structure in a wave A, 3 waves in B, and then another 5-wave structure in a wave C to then finish wave W. And the moment you hit this point of control, hit the 1-to-1 for potentially the end of this wave C, and then on the lower time frame you're going to see a bearish divergence. That could be a potential entry, right? Where you have then the entry for a trade to the downside, a short, where the invalidation is taking the high. This is also based on Elliott Waves, guys, of course. By the way, educational, no financial advice, but I mean, it's already been played out, of course. But yeah, stop loss then above this high and then looking for a trade to the downside, right? Which would have been profitable. You would have been in profit, maybe stop loss break even, or stop loss already in profit, maybe the trade already closed. But after seeing the touch over here with the point of control and then creating bearish divergences, that is definitely a very interesting short setup, right? So then if we look at this scenario, what we are looking for is basically, again, a WXY scenario, where in this particular scenario, you can actually see my brush on the chart over here. And actually the reason this brush is on the chart is because I have been updating my group, where eventually if we go to my group over here, and actually I do this outside of the screen, let me actually put this on the screen over here. If we go to my group, and I go to my updates, then I said eventually after my video, right after my video, I saw that price hit the 1-to-1, it hit the point of control, and I was like, well, this is quite an interesting scenario where we are going to move to the downside, maybe a bit up and then down again. And that is exactly what you're seeing over here. Is in this particular scenario, we again expect a move down, a bit of a move to the upside, and eventually a move down, and then another 3-wave structure, which then is going to be a wave X. And the X is a little bit hidden, but it is right here. And the target box is actually the same. So the target box that you see over here is the same target box as I have shown with this scenario, where this is an interesting area for a potential bounce. Also in this then being a W, a 3-wave in X, before then eventually a continuation in a wave Y, which then also is a 3-wave structure in a wave Y, where an interesting target area is over here, the target box between 30.2K and 30.4K, which also includes a daily and a weekly, as you can see. So this is definitely an interesting scenario, and as you can actually see, like the 3 scenarios I now spoke about are all to the bullish side, where we all at each scenario basically look at some sort of a three-wave structure to the downside before then a continuation to the upside. The only difference is the invalidations change. So the invalidation of this scenario is taking the low over here. The invalidation of this scenario is also taking the low over here, and this invalidation of this very bullish scenario is actually this low. So not the lowest low, it's actually one of the higher lows, because you expect this to be a 1, 2, and then you don't want to see wave 2 going below this blue wave 2 over here, which is the origin of this wide one, right? Where we actually also had the trading setup, by the way, of course, maybe profits taken or extending. But yeah, this is the invalidation for this scenario. And then, of course, because we have to be neutral in the market, we never know what can happen. You always need a bearish scenario. So I have one for you where this is an impulse to the downside, and then this is not a wave C, and then this being an ABC, because this structure over here is actually quite complex to count, where in this scenario, actually my preferred scenario is that this over here is a first structure, second structure, and then we look for another structure to the upside, right? So we have a nice three-wave structure to the upside. That is my preferred scenario. But in this scenario, this over here is the end of this three-wave structure, which is really weird to count, because this over here looks to be a double zigzag, and then you have this move to the downside, another move up, but it doesn't, this high over here doesn't make sense. This move up and then this move up are not really related in any way. So that's why it's definitely an alternative scenario, the bearish scenario continuing down. However, this then is a wave A or a wave 1, followed by a three-wave correction in a wave B or a wave 2, before then continuation to the downside in a very impulsive move, or in a wave C, a move that is at least the same amount of volume as this wave A. If this is an ABC, you expect volume to be quite similar to wave A, in wave C that is, and if this is a 1, 2, 3, you want to see volume increasing to the downside. But then again, this is definitely an alternative scenario, and another reason for this being an alternative scenario is also the bullish divergences that we have between this low and this low over here, where the target for these divergences is 30k, basically the high over here. So to summarize it, I'm basically looking to the upside with the different bullish scenarios that I've shown you. We are basically looking for a little bit of a further correction to the downside, where we are looking for like a three-wave structure. Of course, price can push to the upside. Of course, that is always a possibility, right? Especially, oh, I'm messing things up, especially in this scenario where, yeah, this could be the high of W, and then this is a three-wave structure. Yeah, maybe this is then an ABC and it's finished. But preferably, I would like to see another move to the downside. And if it moves up, I'm all happy, I'm all good. That's all perfectly fine. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.